Hello, everyone. My name is Thanos Dimadis. I'm the president of the Association of Foreign Press Correspondents in the United States. I want to welcome you all and also to welcome first and foremost our esteemed guests and speakers today in our topic, which is related to the geopolitics, data, and how geopolitical data can drive in better made decisions in the business sector and also in the governmental field and the public sector. Before we go to present our esteemed speakers today, I would like to give you a little bit of the overview of a topic that seems to be a little bit complicated, but with their expertise and their knowledge, we will try to nail it down and make it accessible and approachable as a knowledge to everyone, because data is all around. Data is the major way that governments, private sector, public sector make decisions in our days, and also they are very relevant under the light of the current situation we all are facing with the COVID-19 crisis. Let me give you a little bit of the overview of what we are going to talk about. Widespread access to geopolitically relevant data insights promises to create a more efficient global marketplace, allowing businesses to design global strategies in the most informed manner, with the added potential of creating an opportunity for a sector of risk-averse investors to more safely channel capital to underserved markets. Yet data must still be analyzed and integrated into decision-making based on qualitative judgments and human-centric expertise. This strategic dialogue today convenes experts in converting geopolitical insights into business strategy, with a focus on the value that data bring to these complex boardroom decisions. Let me start by presenting the speakers we have today. First of all, let me present Aubrey Hruby, co-founder of Africa Expert Network and Concordia advisor. Aubrey, welcome today and thank you for being here. Aubrey is an advisor to investors with interests in African markets. She is a senior fellow at the Africa Center in the Atlantic Council and the co-author of the award-winning book, The Next Africa. Aubrey has a successful track record, among others, in investing in early-stage companies, African market entry, project deal identification, investment facilitation, experience in the tech, infrastructure, energy, financial services. She's a co-founder of Insider PR, a term member at the Council of Foreign Relations, and serves on the board of Invest Africa USA. Over the past 15 years, Aubrey has regularly led CEO-level delegations to African countries and coordinated presidential visits to the United States, and she's passionate about strengthening relations with African countries. She works to ensure Africa is kept on the US foreign policy agenda. She also writes regularly for media outlets, including Financial Times. Courtney Rickert McCaffrey, she is a Deputy Insights Leader, Geostrategic Business Group, EY. Welcome, Courtney. Thank you for being here today. Courtney is based in DC and she is the Deputy Insights Leader for the EY Geostrategic Business Group. Courtney drives market-leading insights around geopolitics, corporate performance, and political risk management. She is a recognized thought leader in political risk and global macro trends, with an emphasis on analyzing the strategic implications for companies. In her previous role, Courtney managed the Thought Leadership Program at the AET Carnegie Global Business Policy Council. She led a team of researchers to analyze geopolitical, macroeconomic, technological, and other developments in the external environment and identify emerging trends with strategic business implications. Some things that she will also talk today about and give us her expertise. Justin Spelhaug, he is the Vice President, Technology for Social Impact at Microsoft. Welcome, Justin. The Tech for Social Impact group within Microsoft Philanthropies aims to accelerate digital transformation across 3 million nonprofits globally so they can have a greater impact on the world's most critical social issues. As the leader for the Tech for Social Impact in Microsoft, Justin brings together 22 years of experience spanning commercial and social businesses. Prior to his current role, Justin served as the Chief Marketing and Operations Officer for Microsoft Asia Pacific, spending over 7 years of his career working across developed and emerging Asian markets. Justin also helped to launch the Unlimited Potential Solutions to close the Unlimited Potential organization within Microsoft, with a focus on developing new and more affordable computing solutions to close the digital divide for lower income societies globally. Neil Brown, welcome Neil. He is the Managing Director of KKR Global Institute. Neil joined the KKR in 2014, and he is the Managing Director of the KKR Global Institute and the KKR Infrastructure, focusing on new markets, investing, geopolitical and trend analysis, and energy. Neil is also a senior fellow at the Atlantic Council in the United States, specializing in energy and foreign policy. Prior to joining the KKR, Mr. Brown, Neil served for over 8 years as the senior staff member of the United States Senate Foreign Relations Committee. He led legislative efforts and oversight on global energy security and governance, environment, and domestic energy. And he worked also on countering weapons of mass destruction. He also served as the senior advisor at Goldwyn Global Strategies on the U.S. Extractive Industry Transparency Initiative Advisory Committee for the U.S. Secretary of Interior, and as the senior fellow at the German Marshall Fund of the United States. He previously undertook refugee and development work while working and living in Nepal, Namibia, Egypt. Currently, Neil is serving on the boards of the Lugar Center, Merton College Charitable Corporation, Association of American Road Scholars, and Columbia University Energy Journalism Initiative. Steve Bennett, welcome Steve, and thank you for being here. He's the Director of Global Public and Financial Services Sectors, SAS Institute. As the Global Public Sector Practice Director, Dr. Bennett is passionate about helping governments around the world put their data to work for the citizens they serve. In his current role, he drives strategic industry positioning and messaging in global government markets, a thought leader in decision science and the application of analytics in government, which is a topic that he will speak about today. Steve works to ensure that analytic solutions at SAS deliver maximum value for governments around the world. Recently, he has additionally been appointed to serve as the Global COVID-19 Incident Manager for SAS. And prior to his role at the SAS, Steve held a number of leadership positions during his 12 years in the US Department of Homeland Security. Following the events of the September 11th, 2001, Steve led the design and application of quantitative analysis to inform some of the United States' most challenging security decisions. And over the course of his career in government, he led numerous efforts to provide analytic decision support to senior officials in the White House and across the United States government. Thank you all for being here today. I would like to start with Aubrey. She has been, of course, very familiar with countries in Africa, particularly where the infrastructure is very weak. And we would like to know how the data analysis is approached in these countries with a very weak infrastructure, because when we talk about data, we take into our account and knowledge that we are talking about developed economies. But when the infrastructure doesn't exist or exists and it is very limited, how data can be used and drive decisions?
Yes, thanks, Thanos, and pleasure to be here, especially with some old friends. So one of the greatest challenges investors have in looking at opportunities in African markets is the lack of data, or lack of data in a way that they're used to receiving it or processing it. This in particular stymies, developed country companies So American companies, European companies that are used to making data-intensive decisions. I think companies from India and China and other emerging markets are used to making decisions in a different way. And that changes how they're able to navigate in the region. So one of my friends likes to say that an American company and a Chinese company are looking at the same opportunity in African markets. Let's say it's in Nigeria. And they look at that opportunity, and let's say it looks like a tiger, if you will, if you'll follow me in this analogy. The American company wants to count how many stripes it has, how long its teeth are, how forceful its pounce will be, how sharp its claws are. And meanwhile, the Chinese company will just jump on and hold on to the tiger for dear life. And I think that analogy is really suited to the challenge we have in navigating African markets in a data-dependent manner. Data exists in them, but it exists in people's heads. So it's not in a way that's easily accessible, though the mobile phone revolution has made more and more of it available. But in terms, if you're sitting in Chicago and you're Heinz and you want to put a ketchup factory in Kenya, you need to understand what the average acidity of a Kenyan tomato is. And in order to find that out, you may need to find a tomato guy. Or you may need to combine a strategy of very low-tech solutions, so putting someone on a corner to count the number of people that come by, with very high-tech solutions like those that are employed in geospatial analysis like the company Frame is doing. So if you're KFC and you want to figure out which corner to put your restaurant on in Lagos, you need to figure out traffic patterns and ability to purchase or ability to pay in that area. And in order to get that data, you might have to employ more expensive and dual approaches to get that data. So I will say that getting the data and crunching the data takes a bit of creativity, and it's often more of an art than a science in emerging markets. So I'll stop there because I know we'll have a robust conversation.
You raised an issue on the different way of approaching between, for example, the American government and the Chinese government on how to get the data or have access to data or reach out to data. Can you a little bit elaborate more from your experience, some examples about the different approach that, American government compared to
Sure.
another government try to get the data information and try to analyze it?
And so when I was speaking, I wasn't so much speaking about the American government or the Chinese government. I was speaking about companies and the corporate approach. And I think, for example, a company wants to understand the market opportunity. So how large is the market? And that question is one that's very difficult to answer in a lot of African markets, a lot of emerging markets, period. So how large is the market, say, for pencils? Okay, you might be able to find a proxy that makes sense for pencils, the number of school-aged children, etc. But then if you try to understand the market for something like a new health juice, a juice that's like marketed to a kind of a healthy consumer, something that market hasn't yet actually been created in a way, it's very hard to find reasonable proxies to build that market data off. I can say one of the switches that I've seen in market entry strategies dependent on data has been a switch from national level data, so taking the country level, and looking at city level data, which becomes very important when you see the great disparities in average incomes that you can see across African markets. So you might not be looking at a market of 200 million in Nigeria. You actually probably are looking at a market of 3 cities, Lagos at about 20 million, but of course not all of that's going to be your market, Abuja, and then maybe Port Harcourt. At that point, you might not be done with Nigeria, and your next entry point would be maybe Accra or Abidjan, not the rest of Nigeria. So I think a city-based approach is taking over in terms of some of the market entry strategies. In terms of the differences, what I see often is that Asian companies, particularly Chinese companies, are more willing to get into the market and maybe lose money for a while they learn. And I feel like that approach is kind of diving in and figuring out how to swim once you're in the pool, rather than standing on the side and trying to understand how cold it is and like, you know, how deep it is and all of those things. So I think it's a different mindset approach.
Thank you. Courtney, I would like to ask you, what is the approach that you take through your experience and work on analyzing the political risk and using data to make or to drive these decisions for your clients?
Mm-hmm. Yeah, thanks, Thanos, and thanks for having me here today. So yeah, I mean, I think in terms of how we work with clients and how I've worked with clients throughout, you know, political risk analysis career is really a combination of the quantitative data and the qualitative insights, because what I found is that either alone is often not enough to inform business decisions and business strategies that our clients are looking for. So in terms of, you know, the qualitative insights, it's really, you know, getting the geopolitical insights from a variety of external and internal sources around the company, and any sort of external, you know, political risk insight providers there are. And then in terms of the quantitative metrics, yeah, there's a variety of approaches. You know, there's a lot of different sort of political risk indices out there that measure different aspects of political risk. There's more sort of objective data on sort of political institutions and things like that some clients are interested in, although sometimes that can be a bit hard for companies to interpret if they don't have sort of a political scientist or the political background to interpret that type of data. So that's what we've seen is sort of the mixed quantitative qualitative approach, and then, you know, comparing countries at a point in time and also over time, I think helps a lot and kind of drives some stories around helping executives see how the data and the numbers kind of translate into what they experienced on the ground or in their business operations over time. So sort of, and then you can compare that to what you're seeing currently in other markets to help drive decisions.
What are the greatest, let's say, challenges in either the quantitative or qualitative approach that you are pursuing on analyzing data?
From what I've seen, it's getting the business decision makers to understand how to use the insights they're getting, whether they're quantitative or qualitative, because a lot of times the political risk insight is interesting, but it's hard to make it relevant to the business, or it's hard to sort of do that translation function from you know, the risks that are out there, that, you know, the geopolitical trends that are occurring, to what that actually means for business in terms of, you know, maybe supply chains or, you know, the human resources or you know, revenue forecasts, things like that. And so trying that translation function, I think is the greatest challenge in terms of actually using the insights that are out there.
Do you think that the businesses are more well prepared than the governments on managing or delivering data or collecting data and more efficiently?
It's a very good question. I am not sure. What I can tell you is that we actually did a survey of about 1,000 global executives at the end of 2019. And one of the questions we asked is whether they collect data on political risk. And 73% of executives actually said that their companies do collect that data. So how they're using it is an open question, I think. But we know that the vast majority of companies are actually at least looking at that data and trying to use it to drive their decisions.
Steve, I will come to you because I know that you work with a lot of governments, and I know that you also spoke recently about the role of the artificial intelligence as a tool on behalf of the governments to collect and to apply the data effectively in order to make better decisions for their citizens. How efficiently governments are prepared to use this data, and also are they also prepared to apply artificial intelligence tools on the process?
Well, so Thanos, again, just thanks for the invitation, the opportunity to be here with my colleagues. I will give you the very non-committal yes and no to your question. You know, artificial intelligence holds a lot of promise for government, and there's a couple of reasons for that. One of them is that a lot of the data that government has to work with exist in forms that are very hard to mine for insights without things like artificial intelligence. A lot of text, a lot of imagery, often a lot of video, depending on the context. And those have been data sources traditionally that are very, very hard to get good insights from without some of the advanced techniques that we see in artificial intelligence and machine learning. Politically, AI is a big deal in government. You see countries, appointing ministers of AI at highest levels of government, a number of countries drafting national strategies. But the kind of the penetration of AI into decision-making is kind of hit or miss. You don't see a lot of large enterprise-wide uses of artificial intelligence in government agencies. You see, pockets of projects that are very successful for specific tasks. And I think as governments get more mature in understanding how to use AI, I think that will change, and you'll see broader, enterprise usage of it. I think Courtney's comment is right on. The bigger challenge is cultural. Often in these agencies, you could do the best analysis in the world using artificial intelligence, but if the decision culture isn't ready to use that or apply it, or doesn't know how to, make a decision differently because of it, then it's not all that helpful. And so I think there's the technology challenges we always have in government, lagging sometimes a little bit behind private industry. But just as important are these cultural issues around how do we take what we get in something like AI and put it to work to change how we make decisions.
Have you ever felt you or your teams frustrated when we work with a government that, either doesn't have the actual desire, or it is too bureaucratic to pursue these advanced tools?
That never happens. I have no idea what you're talking about. That never happens. Well, let me give you an example from when I was inside of government. So I as you mentioned in my introduction, I started at Homeland Security just shortly after it stood up in 2003. And, we were doing a lot of quantitative analysis to figure out what the biggest risks were to the United States. My background as a scientist, I was working on counterterrorism for biological weapons. And we wanted to know, we got people sending, anthrax in the mail that year. And what are we most at risk from in terms of biological threats? And so we did a very complicated simulation, an unprecedented sort of risk analysis across a large number of potential threats. It took us 2 years. And, we got to the big meeting. I was in my late 20s. We got to the big meeting with the very senior people to present our results. And, they said, a very senior guy with stars on his shoulder said, Dr. Bennett, I love your analysis. And I've since learned that when somebody starts that way, you're usually in trouble. He said, I love your analysis, but here in my agency, we just trust our gut. So, but thanks very much. And so we saw a lot of that in some of the early days. And really that, kind of being young in my career, my mistake was not doing good stakeholder management 2 years earlier with that guy, having him along for the ride along the whole way. But, we ran into a lot of challenges culturally in, taking the results of analysis and putting them to work. So yeah, we see a lot of frustration inside of government and certainly in my role now advising government. But Thanos, it's a worthy fight. And I think it's worth hanging in there and working with governments because the potential is so high.
Mm-hmm. Justin, let me share to the other speakers and to the attendees a little bit of the discussion we had before about something that you mentioned, and I would like to bring it up as a topic because it's a very relevant topic. I'm not sure if I'm going to describe it correctly, but because it is a little bit developed framework. But from my understanding, there are, of course, we have the private sector, public sector stakeholders, non-profit stakeholders, and all of them, at least those who are committed to pursuing the Sustainable Development Goals of the United Nations, they are doing their best. Although, as Justin gave in his perspective in our conversation, there is always an information gap, which is consisted on the one hand on the challenges that are facing to pursue these goals, and on the other side, on the problems and the funding problems that these private sector, non-profit organizations are facing to achieve these goals. Is this called the information gap, Justin? Do I describe it correctly?
Yeah, Thanos, you've got it right. And thanks for inviting me into the discussion with new friends here at the table. And certainly the most important, probably existential use case for geopolitical data is putting it to use to help us solve the challenges that we face with the SDGs, more immediately with COVID-19. And for your listeners that have been engaged in the UNGA, you'll know that across almost every indicator of the SDGs, we're falling backwards right now because of the inequities created by COVID-19. So how do we start to solve that? How do we do a better job matching the solutions that are needed to get after COVID-19, to get after the SDGs, with the problems that are out there? And one of the things that we fundamentally see is a breakdown in the marketplace, a breakdown where there's an information gap, even in developed markets like the United States, between where the problems are and where potential solutions and sources of funding can play a part. And at the core of this information challenge causes companies and innovators and social entrepreneurs and government stakeholders to chronically underestimate the market value of particular solutions and overestimate the risk. And it drives inaction. And the proof is in the pudding. If you look at the nonprofit market in the United States, it's a $2 trillion market where they spend $2 trillion in income per year across about 1 million nonprofit organizations. When you look at the application of technology products and solutions by every dimension, the technology industry has kind of failed to deliver the services that nonprofits need. Why? Is that because nonprofits require less technology to do their work? No. Is it because there's other constraints? There's not. There's an information gap fundamentally in the marketplace. And this is where you can use some really interesting tools to solve this information gap. And one thing that we have been looking at is how do we better leverage domain-specific knowledge graphs and the power of AI to crawl the web. And I'll give you a US example. Organize 600,000 990s, organize SEC filings, organize the world of solutions and problems so that we can create a better marketplace to match innovators and problems and drive more innovation velocity. And we've actually launched a new solution through a partner. We're testing this out called X for Impact, and x4i.org, which is a platform that attempts to drive these matches. And we're seeing organizations like Autolung. It's an organization that's building software to create low-cost respirators, using these platforms to find new buyers for their solutions and services. And we think using these kinds of AI technologies to create new marketplaces can create the innovation velocity we need to solve some of that gap that we're seeing behind the SDGs and behind our COVID-19 response more broadly.
And how soon do you think that this gap can be closed? Like, what is the prospect, the timeline, and
Well, we need to solve it by 2030, don't we? And we're not on the right track right now globally. Every stakeholder plays a role: private sector, government, nonprofits. And so, I don't know how long it's going to take to solve the gap. What I do know is that technology can help bridge that information gap between suppliers and vendors that are building technology and those that need technology. And we're seeing just a lot of velocity, a lot of new organizations coming up trying to meet the demands of the SDGs. We're also partnering with UNDP on a COVID-19 global facility where we're going to look beyond the US and look at how do we use AI and other analytics tools to help match SMEs. 70% of SMEs today are out of business or struggling, but the statistic is 70% are out of business. How do we help match their services, their business, with new market opportunities in the Philippines, in Kenya, in South Africa, where SMEs are at the very, very heart of the economies in all of those countries?
Thank you, Justin. Neil, one of the topics that you are involved at the KKR Global Institute is, of course, the new markets investing. I would like to know, and I think that this is the question also from our attendees, what is the role that data play in this process of investing in new markets, and also in the broader framework of energy and geopolitics?
Yeah, well, I joined my co-panelists here and thanking you, Thanos, and Concordia, and also congratulations to Concordia. I think 10 years now. It's remarkable what they've accomplished. So for those who aren't familiar with it, KKR is a global investor. We're most well known for our work in private equity and similar types of private investment. And investment is inherently a data-driven business. Right? You have to meticulously go through your return expectations. You have to do your downside case. You have to do your upside case, and really grind it out. What KKR realized some years ago was that the geopolitical risk was not being handled in the same way, not being handled necessarily in a data-driven way, but I think even more importantly, it was essentially being outsourced, right? And so you have a large industry of consultants who are very, very good, but who sit outside the investment process. And I think the sort of aha moment for some of my predecessors at KKR was like, listen, to achieve efficiency, to really understand risk, and to convert that risk into investment opportunities, you have to embed it in the process itself. And embedding it is more than just get a report and put it in the investment committee, because an external party is never going to know all the details, and their incentives are never going to be fully aligned. And so what we do inherently is work with our teams around the world to try to ask the right questions. I think Justin said something very important, which is a lot of companies overestimate risk. Overestimate it because they read the Wall Street Journal and see bad headlines, and then they get a pile of data that's very hard to interpret, and they're not necessarily concentrating on the right thing. And I think Aubrey spoke to this as well. You have to, for each market, you have to be able to discern using data, but also using judgment, what really matters. What matters for an investor, if you're an operational company, what matters for your operations there. So that's what we strive to do. I also think that an important aspect of that is that you have to break down silos. And that's one of the real opportunities with data. Some of the silos we try to break down are the Global Institute has a geopolitics tone, if you will. It also integrates that with macroeconomics. It also integrates it with environment, social governance considerations. So you try to get a 360 view of the question at hand, whether that's a specific investment or whether that's a sort of systemic risk or asset allocation question for a fund or for KKR corporate. But that's a different approach, and I think that what we're going to see is more and more, whether it's in the investment community, whether it's in operational companies of various sizes, whether it's in government, more internalization of specialists who can absorb this data, can absorb this also qualitative data, and to make judgments that can then enable better outcomes from the beginning. And by the way, sometimes the better outcome is to say no. Right? There's a mistake sometimes in thinking that you sort of, it's a question of getting to yes. Well, sometimes the best answer for us, for our investors, for my colleagues here, for either for other clients or for their internal stakeholders, is to say no. Listen, this is a risk that we can't take for X, Y, and Z reason, and let's move on.
Aubrey, have you experienced this type of stance or position from the private sector in regards to investing in African countries, on if they feel like there is a lot of risk on making an investment on African countries without having clear view of the exact data, without having the infrastructure? Is this a barrier?
Yeah, no, it's one of the biggest barriers to getting investment in the region. I mean, I see three major investment barriers. One, a lack of data. Secondly, a lack of network. The number one thing I've been hired as an advisor over the years is who should we work with? And third, a lack of visibility. You can't invest in things you cannot see. And distance makes it difficult, right? So this is reason why I started an expert network for Africa to try to connect to the right people with the data in their heads. Also why I have a PR firm, because you can't invest in things you cannot see. Visibility is a gap, an investment gap. And so what I would say is Neil is exactly right. There's been often a reliance on headline risk only and simplistic headline risk. And often in many of the cases, your greatest risk in emerging markets, just like in developed markets, is your counterparty risk. And so understanding who your kind of off-taker is or who your counterparty is very, very important. And I like what KKR has done because they're integrating it into the overall decision maker. So decision making on an investment. So it's not like a added on bolt at the end or like a CYA kind of effort to cover, at the end too, where you're just putting a document in a file in case you get some kind of question or audit. It's actually informing the decision. And people always exaggerate unknown risks. It's just the nature of life and humans, right? So all the time people ask me, Aubrey, as a woman, are you afraid to go to Nigeria? Are you afraid to travel to South Africa or something like that? I'm like, I live in Columbia Heights, Washington, D.C. You should see the crime rates here. People are afraid because of our school shootings, our everyday, all kinds of things, but our risk is known and we feel like we can navigate it. The unknown risk becomes scarier. So it really is a process of taking unknown risks and making it as known as possible, but still acknowledging that there are a lot of things you cannot know. And you're going to have to learn as you go. And then it just becomes a question of what tools exist to mitigate. And I'm sure that is a big discussion Neil has when they're in an investment committee is, okay, here are the risks. There's no riskless deal. If not, you are going to get no returns on that deal. I mean, you're paid to take risk. That's what the return is. So in that sense, you're not going to find a riskless deal. So it's a question of, do we have the tools to mitigate those risks? And now more countries like the US government are putting together commercial tools that better help companies navigate those risks. And some of those tools might be data tools. So that's going to be an interesting thing as we see the evolution of the Trump administration's Prosper Africa program, is how much those tools allow investors and potential exporters, importers to access more data on the opportunities.
Courtney, what is your view on these points that just Neil and Aubrey discussed from the point of view of the political risk management that you've been working extensively?
Yeah, thank you. Yeah, I was hoping to jump in here. So yeah, I think both Neil and Aubrey made some really good points. And I mean, what we've seen too, sorry, there's a siren going by. What we've seen at a lot of clients is that sometimes within an organization, the political risk committee or whoever does that analysis within a company is seen as deal killers, right? Like they're seen as just saying no to anything. But to Neil's point, like sometimes that's the right answer, but sometimes it's not. As Aubrey was saying, you need to identify mitigating actions. So I think that's sort of a communication challenge within companies, or between sort of the political risk analysts and the final decision makers is, okay, these risks exist. We can measure sort of the risk that's out there. That's one way of measuring the risk. But then there's a second measurement that needs to come into play, which is what is the risk level after we employ all the mitigating actions that we can identify, right? And so then you're left with sort of that residual risk, and then you decide if you're comfortable with that.
Justin, I would like to jump into the field of the nonprofits and the digital transformation that you've been working and helping millions of nonprofits through your role at Social Impact of Microsoft. Is it easier to try to promote the digital transformation in a nonprofit more than compared to a government?
Thanks for the question. First off, a nonprofit is a tax code at some level. When we talk about nonprofits, we have health and human services organizations, that sometimes look like hospitals and governments, environmental research organizations, and just a huge range of organizations that we serve. And they do face some systemic barriers. You don't go work in a nonprofit because you want to configure servers and work on technology. Often you go work because you want to work on the purpose and cause. And so when we look at the nonprofit sector, we have to take some extra steps to ensure that we're investing in the sector in a way that builds the fundamental capacity that you kind of take for granted if you're in the financial services or manufacturing sector or even government. Those IT teams just aren't there. So how do we build those? How do we build that capacity with the right training and support? How do we build a coalition of partners that are willing to serve nonprofits on a lower cost basis, still making profit? They've got to pay their bills. But then importantly, how do we design technology that takes the cost out of the equation for nonprofit organizations? And so there, we look at designing standard technology that helps, whether it's fundraising or program measurement or data analysis, as we're talking about here for program outcomes, designing accelerators, designing templates, designing applications that make it far more efficient and cost effective to implement the technology. All of that is about bending the cost curve down for nonprofits so they can afford more technology, while also creating capacity to use that technology and ultimately apply it to the mission. So that's what's a little bit different with this industry than other industries.
Thank you. Steve, we've discussed the way that data can apply decisions on behalf of governments to serve their citizens, but there is also another issue raised here on that regards to the privacy. There is a lot of discussion on how governments are using our data and what is the limit that protect the citizen from unauthorized use of the data and potential break of its privacy. Have you dealt with these sort of situations from your role and these concerns?
Sure. Always top of mind, or should be top of mind for a government when we're looking to to use data that the government possesses to try to help make decisions in some sense. When I was in government, we struggled with this, particularly the department that I worked in Homeland Security. If we wanted to use even publicly available data to do something, to do some analysis, we had to be very, very careful to make sure that we checked every box along the line in terms of privacy compliance. And so in the United States, there's a strict set of laws for any government agency to use personally identifiable information or other information that should be kept private, and there are pretty strict agency and personal penalties if you violate that. And similarly in Europe, my role at SAS now, if you don't know SAS, we've been around about 4 decades, kind of leading analysis and analytics in the market for both governments and financial services and other sectors, and we see this quite broadly globally. Outside of my role in the U.S., GDPR and other sorts of privacy frameworks in Europe and elsewhere are growing, and it's important. I think as as citizens, we should be skeptical by nature if our government wants to use our data that's healthy, but at the same time, we've got to make those laws adaptable to situations where there are exigent circumstances, so that government can perform its functions. A key example of that is the COVID-19 pandemic. Governments have a lot of data, and thankfully, frameworks like GDPR, frameworks like what we see in the United States, have carve-outs for exigent circumstances, things like terrorism, things like public health emergencies. And so it is possible to still get the most out of data in these sorts of circumstances like we find ourselves now, and still be in compliance with the law. But there is always that tension, and it's a healthy tension of the of the legal frameworks versus versus what we could do with that data for government to advance our mission in serving people. Mm-hmm. Now, that said, there are, of course, countries in the world where there are different boundaries in terms of the could we versus should we in terms of what we do with data, and that presents a whole sets of different challenges.
Hey, Thanos, can I come in on this one?
Absolutely, of course.
No, Steve, just to build on what Steve said, certainly as we look at data, and then if you bring in artificial intelligence, the bar's increasingly going up on making sure we have an ethical way to treat and use that information. Certainly as we're interacting with personal data, powerful tools like facial recognition, all of these things can be used for good and can be used for bad, frankly. So one of the things that we've been tackling here at Microsoft, and I know the industry more broadly is tackling it, is how do we create the right ethics and principles for using this data and designing AI technologies. And we've been anchoring on really 6 core principles. One around fairness, that an AI system should treat all people fairly. Reliability and safety, an AI system should perform reliably and safety and within the spec that has been designed. Inclusiveness, it should represent and empower everyone. Transparency, we should know what these systems are doing. Privacy and security, of course, and accountability for how we deploy those systems. And the more we can align and lock on these kinds of principles as an industry, even through legislation, I think the more we're going to be able to design solutions that point us in the right direction of having the right impact.
Hey, Justin, can I follow up there? I love what you said there. And when we look at this in government, I think you're spot on. If someone, if we're shopping on Amazon or your e-commerce retailer of choice, and they use some machine learning or AI to try to predict what pair of jeans I want to buy, and they get it totally wrong, the consequences are pretty low, right? I don't buy the pair of jeans, they lose some revenue, they need to retrain their models or do something a little bit different. And those decisions of what pair of jeans to show me are fully automated. Thanos, to your question about government, very, very different stakes, right? I mean, if you think about the possible consequences of getting it wrong in government, it's not just lost revenue for a sale. It is, somebody gets denied a benefit, or a tax return, doesn't come back correctly, or in the extreme positions, someone may be deprived of their liberty if data is used for a law enforcement action. So everything Justin said, I think the stakes go up even higher, for government, because when you get it wrong, the outcomes are much worse than in a lot of other industries. Getting denied a loan is bad, but being denied a social benefit for your family, I think we would say is a little bit higher stakes.
We have a question from one of the attendees. How are companies integrating political risk into global capital allocation strategies? And I would like to ask Neil, when you're about to make a suggestion of an investment in a new market, what is the role of the political risk aspect and perspective that is played in your decision? And also, Courtney, I would like to have your also insights on that. How that's important?
I wish that it was just the domestic political risk. I think in the world we're in today, it's also geopolitical risk, and you see the rise of strategic competition between great powers around the world. I think that something that Justin talked about earlier in the great need for progress on the Sustainable Development Goals. I agree completely, and I would posit that you're not going to achieve a number of those goals until you get big finance to invest behind them, right? It's just a numbers game. There's just limited capacity within governments. And so for those of us who want to really push that agenda, we run up against a fundamental sort of problem of human nature and of incentive structures in corporations. And that is, if you can hit a ball down the fairway time and time again, why the heck would you ever do something different, right? Why, if you can just keep doing investments in Western Europe and do well, why bother with, Aubrey used the example of Nigeria. And so you have to make a commercial case, but I think that this is coming to your point, that I think it's a real responsibility of people who have some of these tools that Steve and Justin are talking about, or have the political risk analysis experience that Courtney and Aubrey have talked about, I think we have actually an ethical responsibility to try to cut through the noise and to show to try to break risk out into bite-sized chunks, and understand what you can mitigate and not. So it's a very long way to what is a simple answer, which is it's question number one for a new jurisdiction, right? Because it's existential. If you're going into, a new country and you don't understand the risk of nationalization, just to use sort of a very big, obvious kind of example, then if you can't get comfortable on that, you're not going to bother. And so you have to cut through that stuff at a threshold level to even get to the risk analysis around the specific investment, which may be sort of consumer trends, or it may be sort of some small regulation, et cetera. But you have to break through that brick wall at the beginning to even have the conversation. And I think that everybody in this conversation, but I think that it's more than just an economic opportunity. I think it really is a moral imperative to where we want the world to go.
Courtney, do you want to give your insight on what just Neil said? And I would like to add another question on, do you agree that to some extent there is also the way how each government and the framework that exists within a country is applicable to changes, or it brings more barriers when it comes to suggest an investment or make an analysis for a particular country?
Mm-hmm. Yeah, so in terms of what we're seeing of how companies integrate political risk into their capital allocation strategies, I think to the point you just made, Thanos, a lot of it is sort of a country by country assessment. So they're assessing really country risk, right? And so in that sense, what we see is a couple different strategies there. One is sort of assessing their global footprint, and seeing the risks they face across the footprint, and sort of seeing where there might be, more mitigation strategies needed versus not. And then another tool that we're seeing companies use is sort of thinking about diversifying their overall, capital allocation, and if they choose to go into a higher risk market, sort of diversifying that with the market that is maybe less political risky, and that sort of the risk is perceived to be uncorrelated. So you sort of diversify. If you think of your entire global footprint, you can sort of diversify your political risk across, so that overall it's at a manageable level. So that's certainly one way that we see companies do that. But I wanted to pick up on a little bit of something Neil said too about sort of the geopolitical environment overall. And another thing that we're seeing a trend is a trend towards from globalization to more regionalization. So still a lot of cross-border economic activity and integration, but more at the regional level instead of the global level. And a lot of our clients recognize that as well, and therefore are sort of looking at political risks at that geopolitical level and taking a regional approach to their capital allocation around the world. So making sure that they have regional hubs around the world. So, like in, say, Singapore for the Asian market, or in Lagos for the African market, or whatever the case may be, but making sure that they're allocating their capital in that way, thinking about it in terms of regions.
Mm-hmm. Aubrey, we have a question for you. You mentioned the attendee says market size and growth. How are you practically incorporating geopolitical insights into those forecast estimates?
Sure. I think a good example would be Ethiopia. Ethiopia is one of the largest by population size countries in Africa. It's about over 100 million people. And it's had a very rapid economic growth pace for the last 10 to 15 years. And so that's made it attractive and on the radar of a lot of investors. However, there have been some significant challenges from a kind of a geopolitical issue level, as the government has struggled to kind of keep on a reform agenda and to secure the country from sectoral divisions. And because of that, I think a lot of the investors have just been in a wait and see and a hold pattern around Ethiopia for some time. And so, yes, geopolitical concerns can override some of the appeal of a large market and rapid growth. And I think we've seen that pretty aggressively in Ethiopia. However, as they are making key market reforms in sectors like telecom and banking, I'm seeing increased interest again. So people are balancing in the same way. And, I want to build on something Neil said. Some of these geopolitical risk concerns were very much in a category of foreign and other. And we weren't thinking about them in the context of US or domestic politics. I mean, we're about ready to go into a contested election in the United States. And, a lot of people see that as a significant risk factor from the outside. And who wins will change a lot in terms of how we take, for example, Chinese investment into the US. And then, of course, the Brexit story. So in many ways, you've seen a return of political risk conversation to more traditional, safer markets, and a breaking down of that foreign domestic kind of mindset divide when it comes to thinking about political risk. So, I mean, there are still significant geopolitical risk factors when it comes to a country, say Ethiopia, or even say Djibouti, where there's an American military base right next to a Chinese military base, and it's core to the kind of shipping channels of the world. So some countries are going to be much more influenced by geopolitical conversations than say like a Botswana or a Malawi, right? So it depends on the country in terms of how you practically incorporate the concerns.
Thank you. I would like to do something, asking questions. I would like to have Justin to ask a question to Steve, any question that you would like to ask Steve, and the opposite. Because from your expertise and your knowledge, I believe that you're going to bring some additional perspective on our discussion. So Justin, please ask a question to Steve, and I would like Steve to ask a question to Justin.
No, we've been talking about geopolitical risk, and the one risk that's probably is not geopolitical because it affects us all is COVID-19, right? There's no country, there's no society, there's no corner of the planet that is immune to this thing, and it's impacting every aspect of our risk analysis and how we're looking at economic opportunities, at least in the near term. So Steve, would be interesting, if we put the COVID-19 lens on your work, right, and think about how your work has evolved and how you've had to evolve decisions that you're making. How has COVID-19 influenced your day-to-day work and how you're driving?
Okay, thanks for that question. So, we've kind of, everybody's got their way of kind of carving up the new reality for COVID-19. I mean, at SAS, we think about it in terms of, response, recovery, and reimagine, right? The world's going to look somehow different, when we all come out of this. And so day to day has been very different for me because of my background in Homeland Security. I was asked to stand up, an incident command system inside of SAS, so that we could very quickly do two things. As I mentioned, we've been around for about 40 years as a market leader in analytics, and we wanted to be able to change how we thought very quickly. We wanted to reorient the company and then accelerate to be able to help communities around the world. We'll worry about where the money comes from later. We're good at analytics. How do we get that in the hands of the German Ministry of Health so they can optimize ICU beds? How do we get that in the hands of the Brazilian government so they can move $55 billion in aid to families who need it quickly? How do we get that in the hands of HMRC in the UK to run their tax system in reverse so that people who've lost their jobs get that 80% furlough benefit quickly? So my day-to-day changed on a dime in mid-March because I was immediately looking at how can we take what we're good at and get in the game and serve. And again, very different model for us. We're always, of course, worried about, our revenue. We're a private company, and it was a very different model for us. It was, our founder is built, just as similar to your role at Microsoft, built on a data for good sort of mindset. How do we take data and put it to work for people? And so my day-to-day has been very different and fun. It's been great, really getting to take the stuff that we're good at and serve people, protect economies around the world. So very, very different for us, I would say.
I appreciate that, Steve. Thanks.
Your question, Steve, to Justin.
Well, at the risk of plagiarizing, I thought your question was so good. Can I turn it around? I mean, I'm curious. I'm sure at Microsoft with your, I forget exactly what you called it. We call it data for good at SAS, but with your focus on taking what Microsoft is good at, and whether it's supporting UN goals or serving, how has it affected your work and how Microsoft gets involved?
No, just like you, Steve, like our world is turned on a dime, looking at response recovery and rebuilding. And at Microsoft, the very first step was to help millions and millions and millions of users get onto Teams and engage like this in a remote way. And in the nonprofit sector in particular, over the course of just a few weeks, we had millions of new users that we were working to help support and move into a remote and virtual world. But one of the probably more interesting things that we've also done is we in January, not knowing about, we all knew about COVID in January, but it wasn't the intent to launch this timed with COVID, was we launched an AI for Health initiative. And since launching that, it's been all COVID, focused on both how do we work with organizations on data and insights so they're able to respond quickly, organizations like the WHO, CDCs around the world. How do we help use data and AI to help build better treatment and diagnostics tools so that we can get to the vaccines or the therapeutics that are needed? How do we help organizations allocate resources and get PPE and critical materials, working with World Food Program and others where they're needed most? Also looking at ensuring that there's a dissemination of accurate information. How do we use bots and other technologies to ensure that people are getting helpful information that protects them? And then, how do we continue to fuel the core scientific research that's needed, not only for this pathogen, but new and emerging pathogens that are constantly, frankly, threatening us, emerging from many, many different parts of the globe. So we've been on full alert there. We've run how many projects? 100. We've done 105 grants, 105 different projects across those categories, and really using our data science teams to embed with governments, to embed with hospitals, to embed with the CDC and others to help them move forward faster.
Thank you, Justin. Courtney, would you like to ask a question to Neil and also Neil to Courtney?
Sure. Before I ask a question to Neil, could I just kind of tie those two conversations together a little bit? So I just want to say that our perspective on COVID, I mean, obviously it's a human tragedy and crisis, but we also see it as a political risk event on a global scale, because a lot of the challenges that companies are facing with respect to COVID are actually, political and policy challenges. So, export restrictions and travel bans at the geopolitical level. You've got stay-at-home orders and school closures and stimulus measures, and then financial reporting changes at the regulatory level. So just wanted to kind of tie those two together. I think they really are sort of interrelated, and there's a lot of political risks associated with COVID, and we see those continuing in the future. But with that said, yeah.
Courtney, before you ask me a question,
Absolutely.
can I just, I think we think of it the same way. Obviously at first it's health of our company. I mean, globally through the companies that we own or have a major stake in, we have something like 800,000 employees around the world. So health is first, economic continuation and health of those companies, of course, second, et cetera. And that's, I don't think any of us would have expected to be spending the first half of this year on these kinds of questions, and they continue. But, this is one of the other things that we've seen is that COVID has been a great accelerant, an accelerant of trends that we were seeing before, but just have gone through the roof. So, Justin mentioning Microsoft Teams and the whole teleworking, theme. But also ESG. I remember when Europe and then the US basically shut down, there were lots of questions. Well, would ESG take a back seat, et cetera? I mean, just the opposite, right? I mean, it's even, there's even more momentum behind it. Supply chain disruptions. We're already seeing movements away from China. We're already seeing increased focus on resilience and the fragility of supply chains. But now, somebody thinking about those issues doesn't have to make the case anymore, right? Like you don't have to go to the board and explain about how, a potential shutdown in trade could, be a mortal blow to a company. I mean, it's every day in the papers. And so this is, I think we're just at the edge of seeing what of these trends continue to accelerate versus what of them are, all right, well, let's go back to normal. I don't know which one is which, but this is, I think, an area that we're going to be having to study and try to get ahead for years to come. But now I spoke, so you can ask Aubrey instead.
Great. No, that's perfect. And I completely agree. We definitely see COVID as a great accelerator of a lot of the trends that were already existing. But I guess to that point, in terms of geopolitical and political data, a longstanding problem with it is that it was often a lagging indicator, right? Like the data is kind of old by the time you get access to it. But there's some newer, higher frequency data sets. And so just wondering at KKR Institute, like, if you're incorporating some of that more higher frequency data or how you sort of look at sort of incorporating some of the newer data if you're doing so.
Yeah, I think that I think there are a couple answers to that. One is that the dividing line between what is the geopolitical or political data and market data is increasingly blurred. When you're seeing a major overlap. So as just one example, we get a lot of very insightful and real-time data around consumption based off of transaction data, et cetera. And that kind of thing also can tell you a lot about the pandemic, for example, where people are buying, where they're not, et cetera. So that, an example of how a geopolitical event. I think in terms of just raw geopolitics, I mean, you see, and probably all the speakers see these startups come knocking on the door almost every week saying, hey, I can scrape Twitter and I can scrape Facebook and I can scrape the news and I can tell you exactly what's going to happen in Port Harcourt. And I just haven't been, to be honest, I haven't been impressed. I haven't seen the kind of solid base data that you can trust and analytics to go on top of it to make me feel confident that I could make a decision off of that. I don't know, Aubrey, what do you think? I mean, are you seeing anything different?
Yeah, I think there's, in the markets I work in, there's very little substitute for the qualitative advice of a seasoned person in the market. There's just not a good substitute for it. A lot of the data that you'll get, you need to triangulate. And, again, when you're dealing with small sample sizes in a lot of cases, or like, mean, median, those things won't necessarily be a good indicator because the spread could be so large or it could be skewed by one big one, right? So you could look at, for example, exits for African startups, right? But then if that sample size includes Jumia that listed on an IPO on NYSE, then that's going to be skewed it way off compared to what the actual average size is. So it does take, and someone who's not an educated consumer of that data won't necessarily dig in and see that right away. So in the markets I deal with, it's not just a plug for my advisory services, but it's a point that like you need some kind of person with some experience. And I feel that often the mistake is people do more due diligence more due diligence on their dry cleaner than they do on their intermediary in sometimes going into an emerging market. It's like they just knew a guy who said he knew the president or something. And that kind of approach, I mean, there are very mature and reputable intermediaries in almost all emerging markets, and use them and do your due diligence on the intermediary, because that's where I see some of the biggest challenges.
Mm-hmm. Can I jump in, Thanos, if it's okay?
We do have 7 minutes, and I really want to have a conclusion from each one of you. But Steve, go ahead.
Just a quick connection point, Neil, something you said about kind of I can scrape Twitter, and Courtney, your point about a lot of this being a lagging indicator. I was reminded of a news article and some of the work that the intelligence community in the U.S. did some time ago, the Intelligence Advanced Research Projects Agency, or IARPA. They were trying to do, and it was all open in the press, a kind of an open competition. Who could predict unrest? You probably remember the story, looking at news data, looking at demographic data, whatever public data you could get. Could you predict unrest in certain cities? And they really struggled to get very far ahead. I mean, everybody could get it a week before. That kind of gets easy. But who could get it a few months before? It became very, very difficult. And I think that sort of underscores the point. I mean, nothing beats somebody with ground truth, Aubrey, to your point.
Thank you, Steve. Before we conclude our conversation, I would like to have a conclusion from each one of you on the point: what is the thing that makes you most concerned and the thing that makes you most hopeful about the acceleration of the use of data? Justin?
Right on the spot. Sorry, I had to unmute. The thing that makes me most concerned and most hopeful, probably the most concerned, is ensuring that we have the right international standards and regulatory frameworks for the ethics by which we use data and increasingly powerful tools like artificial intelligence. Those ethical principles that I outlined are being used at Microsoft. We're advocating that they be used more broadly and that we start to standard and norm on the use of these principles as we create new solutions and technologies. What makes me most hopeful is just the tremendous power of technology that we have today. I mean, our ability in the US market to organize the social services sector and organize through this domain-specific knowledge graph all of the data around fundings and solutions and problems through X for Impact would have been impossible 10 years ago without the right AI tools. And the power of our tools is just gonna blow us away, continue to blow us away. We need to use the right ethics and how we apply them.
Neil?
I think what is most concerning is really quite close to Justin, which is that we're seeing a tremendous backlash around the world based on privacy, based on abuse of power, in sort of well-intentioned technology tools being horribly misused, and that's leading to a more divided internet, more divided data, and so I do worry that the more data there is to use, the greater the chance that it can be misused. I think what gives me hope is Concordia. And actually, I mean that in a literal sense, but also as an example of the increasing communication, collaboration, sense of common purpose that you're getting between the private sector, between civil society, and between governments. That I think a greater recognition, you can't just regulate your way out of this problem. You can't just invest your way out of this problem. You can't just protest your way out of this problem. You have to figure out how you work together to solve these solutions, because increasingly in a world of data and instantaneous transfer of data and news, it's national borders aren't so important anymore.
Thank you, Neil. Courtney, your turn.
Great. Well, I certainly agree with what Justin and Neil said, but I'll say something different. One thing that concerns me about the use of data is people not understanding it, particularly when it's more of a black box. If it's some sort of algorithm or AI generated data, just making sure that somebody understands how that data came to be and what it really means, and making sure that understanding is widespread for people who are trying to use that data to make decisions. But something that makes me hopeful is that there's a greater attention to an appreciation of this kind of data, especially geopolitical and political risk data. And I think that's good not only for companies that can help them make better decisions, but also for societies and for countries, because governments know that data is being used, and therefore they try to improve their metrics on that data. Like the doing business indicators is a prime example. Countries actively try to improve their position on that index to attract investors. So, and that's good for their societies as well in terms of longer term economic growth and stability. So that's what makes me hopeful.
Aubrey?
Yeah, I guess what keeps me up at night is kind of what I would call an incomplete market for data. They say data is the new oil, but if I find oil in my backyard, I own that oil and I can monetize it, but I'm giving up data every day and don't know how much it's worth or how it's working. So I think it's an incomplete and asymmetric information type market failure, or just not yet mature enough. And so that's what I worry about. I think we'll all make a lot more educated decisions when we all understand the value of the individual data that we're giving up every day. What gives me hope is, as Neil said, the speeding up and the accelerating of trends, particularly digitization in African markets. One of the biggest constraints to investment in the region, and then therefore constraints to job creation, are small fragmented markets. 30% of Africans live in small landlocked countries. 3% of the globe does. And that shows in all ways. And so as we can digitize and remove barriers to trade, remove friction to investment, that's better for all. So that's really what gives me hope.
Steve, we're going to close with your remarks.
I'll be brief. What makes me nervous, that quote from Vladimir Putin a couple of years ago, whoever becomes the leader in AI will become the ruler of the world. What keeps me up at night is the different levels of self-control in different places in the world, that could you versus should you problem. Not everyone shares, liberal Western values around the limits of where this technology should be used. And that makes me nervous. So the power of AI makes me nervous. But what gives me hope is the power of things like AI and this technology as well. The same technology that can predict when an F-35 is going to break before it breaks is also the same technology that can be used to deliver tailored benefits to citizens who need it. So I think it's an unprecedented time for value in terms of data and solving a lot of problems.
Thank you all very much. I think I personally learn a lot because you are real experts on the field and you have extraordinary experiences and backgrounds, and I'm really honored that I have been with you today. And thank you very much all, and thank you Concordia for taking this initiative today. And be well and safe.
Thank you.
Thank you.